These are in listen-only mode.
All right. Good afternoon, traders. Oh, I miss you guys so much when we don't get to hang out as much as we used to. So we'll keep fingers crossed to maybe pick things up again after the end of the summer. It's good to see you all. Welcome out. I hope you had a great weekend. Wonderful Wednesday indeed, Dennis. Hello, hello. Welcome, everybody, to the Tradespoon Live Trading Room, Stocks and Options. My name is Scott. I am the head trading coach at Tradespoon. I am lucky enough to still get at least a couple of days a week with you, and I will take advantage of it. And today we'll spend a little time just sort of discussing current market conditions, right? Talk about the inflationary report that came out and how it's being processed, what it means to us. We'll talk about what other information is coming out soon, where we think the money's going, and howdy, Bob. I mean, I am still the head trading coach. That's true. I've got that going for me. Oh, goodness. All right. For now, indeed, for now. Good to see you guys. Let's get started. I've been trading for a while. I've been teaching for a while. That's me. These are the disclosures. As you should know by now, we need to be very careful out there and make sure that we understand and account for risk, that we have a plan, and that we are in control of everything that we do. We can't control the markets, but we can control ourselves and our actions. All right. Good. As the market continues to meander, the attendance levels are still a little light, though I usually see it double from the time that I look at it in the start versus once we get going. Usually it picks up a little bit, so we'll keep our eye on that. If you're new, and there's going to be a higher frequency of new people that I don't get to talk to. If you're new, please reach out, say hello, introduce yourself. As of now, I'm only here on Wednesday afternoons and Friday mornings, but certainly want to take advantage of that. All right, well, let's talk about what we know. What do we know about the markets? The stocks turned mixed, which means, we went from negative. We started down 1% plus across the board. And now things have gone to neutral, and on the NASDAQ and Russell, even slightly positive. So what does that tell us? Well, it tells us that we're shrugging off this negative inflation report. Right, the highest in over 40 years. But what's the information we need to understand about that inflation report? It's consumer inflation, which is the laggiest. Is that a word? Most laggy of all inflationary data. One of the things that we've been talking about is as we watch raw material and food, energy prices, as we watch crude oil futures, natural gas futures, gasoline futures, corn, wheat, soy, steel, right? All of it. What have we noticed? It's all come down pretty substantially from the highs. But what haven't we seen? We really haven't seen it play into the consumer information. Right yet. So as we get this, let's jump around. We were expecting 8.8. We were expecting 8.8, and we got 9.1, which was obviously higher than 8.6. And it's across the board. Expecting 1.1, got 1.3. Expecting 0.5, got 0.7. Right? So it's like, oh, yeah, I mean, it is. It's still there. But the other things that we're looking at has definitely showed that things are starting to settle. The fact that the market gapped down but has now shrugged it off, to me, says, oh, okay. Right? We're going to look at other variables to continue to assess this, but overall, well, there's reason to have a bit of optimism when we respond to a report in that fashion. Beige book came out about an hour and 12 minutes ago. I really didn't pay that much attention. Let's go see. Social Security will go up. That's true, right? That's true. So right around here, you'll notice right before the beige book came out, this is interesting. We'll even get a quiz in right now before we go back and redo some things. Okay, so right when the beige book came out, it had this big sell-off, which actually stabilized within 5 minutes and then recovered back up near old highs. Okay, so I'm going to draw a line. Bulls got to get up to new highs for the day. B's, it's got to go below this little range here. C's, you think it's going to sell off into the close. The numbers are, we'll call it 379.95, 381. Actually, we'll make it a round number. We'll go 380 by 381.50. If you think it's going to end above 381.50, you're an A. Between 380, 381.50, you're a B. If it's going to drop below 380, you're a C. Dennis was the first to commit. He said it's a B. It's gonna stay range bound here where we are. I mean, we've been in this range for a few hours, other than when we dipped out around the Fed. Bob says it's going to sell off. He's a C. Well, gosh, where is everybody? I need answers here, people. I need you to answer. I need your predictions. If you've never predicted before, I want today to be your first time. I need it. There we go. Hello, Koo. Good to see you. Koo's a C. Koo is a C. Anybody else? Oof, we're light today. Not a lot of gold medals. I talked about this before. This is what concerns me in the market is it's not necessarily complacency, but it's just we just sort of check out in markets like this. And the more we check out, the more, in my opinion, we are prone to seeing actually a shift in the sentiment. And remember that with everything else going on, there's two things to keep in mind. Number one, the employment is still solid. Tons of job openings. We had a better than expected jobs report. We're in a very bullish range for weekly jobless claims. Everything about it looks pretty good. Number two, the institutions have been piling up cash all year long. As contributions come in because everybody's employed, right? We're still seeing that. So I'm going to join the B's. I think it's going to test above A for a minute, and then it's going to fall back down, and it's just going to stay. But that's not bad for a day like today. Mamudu, did I say it correctly? Mamudu is a B. He's joining the B's. No A's, no Bears, no Bulls today. Mamudu, good. I love it. Thank you. I'm glad I got the pronunciation correct. It's good to see you. Glad to have you. Okay. Everybody's in that wants to be in. There's no gold medal if your answer is not on record. You can't be like, yeah, that's what I would have picked. Nope. You have to declare it in order to qualify for the metaphorical gold. Okay. All right. Let's go back. We're going to jump around a little bit today as we talk about how we process all of this. The rest of this week, what do we have? PPI tomorrow, jobless claims, no concerns there. Friday, we do have a good amount. We have retail sales. We had a little bit of a downtick, but what we're wondering is does it kick back into positive, right? Because if the consumer is spending, we may be okay. And so we are expecting an increase in retail sales, both regular and excluding vehicles. We are expecting a slight increase, though still negative, on Empire State Manufacturing. We're expecting consumer sentiment and capacity utilization and industrial production to stay basically flat. Okay, right? The consumer sentiment, retail sales, that's certainly, I'd be fine if we saw retail sales dip a little bit for a month or two, because what would that mean? That would mean that consumer demand pressures due to inflation fatigue are decreasing. And that would have an organic impact, right? Organic meaning not forced by the Fed, but an organic impact on prices that would allow the Fed to maybe ease up. Give me your thoughts, or maybe what you've read or seen someone discuss. I would say that right now the highest probability for the Fed, which will, in 2 weeks from today, the Fed is going to be announcing the next rate hike. The consensus right now basically says 0.75%. Some people still think 1% is on the table. But I personally think that 0.5% makes sense. Because the last thing we need is for the Fed to jerk the wheel and overcorrect, only to have to then lower the rates, right? Where it's like, look, yes, consumer inflation was higher. It's the last to show any signs. So, let's see. Bob says, I think we should pause the session and see. I actually think that 0.5 point would be a pause, just simply because it would be lower than expectations. It allows them to, if you remember 2 months ago, they're like, nah, we're not looking to do anything above 0.5 point. And now all of a sudden, right, it's like, whoa, well, maybe we'll do a point. Yeah, right. It takes time to turn the battle, to steer it. It's slow, it's methodical, it's an enormous economy. So it's like we don't need to keep slapping it on like, oh, it's not working. Well, how long do you think it's going to take? Relax. We are seeing things come down. That's just me. That's my opinion. We'll see if, Jerome gives me a call, Jer Bear, as I like to call him. If he gives me a call prior to the, I send him an email and I'm like, Jer Bear, you old bastard. We're on good terms, so it's a term of endearment. I'm like, don't overcorrect. Relax. Give it 0.5 point. I don't know if he'll listen to me or not. We'll see. Okay. So that's on Friday. We have a decent amount of data. Next week, the economic data slows down, but the corporate data speeds up. So we have home builders index, nothing really there. Building permits, housing starts, nothing there. Home sales, nothing there. Maybe a little bit if we see existing home sales start to slow down because interest rates are causing mortgage is to be a little bit higher. That's going to ease the demand pressure for new homes. Good afternoon, John. Good to see you. So jobless claims should be about the same. Not much on Friday. So next week, the economic data is very light, but the corporate data, because we're kicking into earnings season, is going to ramp up dramatically because we are, in fact, entering earnings season. I've got you as a C. Never too late, John. Never too late. Now, the week after is the Fed. So the last week of July, we you don't have it on here yet, but the next week will be the Fed. Obviously, the Fed's going to be processing all of the data, and we'll see where that puts us. So, okay, let's take a look at the model and see how that's forecasting. So the model is saying that this could be it. We may be done, and this is what we've been talking about, right? Is that we may have found a new support level, which is slightly higher than the prior. So it's not a lot, but we're seeing just ever so slightly. And what would we be looking for? Maybe another kick up, maybe back to the old highs or the previous. So possibly a bullish signal coming out of this minor little consolidation here. That's what the S&P says. Let's go look at the, we'll look at the QQQ next. The Q's similar, only more bullish, right? We're seeing it stabilize and looking for it to kick higher. What have we talked about in terms of tech? We've talked about Apple. Here's Apple. Let's get back to this chart. Bullish, a little consolidation, maybe turning again. I know a few of you, including myself, made some money on this last bullish trade, but that's looking stronger. We're looking at Microsoft. Microsoft got beat up yesterday. I'm not sure what happened there, but it's trying to stabilize. I like Apple better. Not as good, but okay. And the other thing that we're looking at, I'm going to jump now to the map. Another area of technology that we've been really concerned about. Black is not going to cut it. Let's go here. Semiconductors, chips. I'm okay with these, a little less okay with this one, but it's all right. But chips, not bad. What's up, Chris? Now, where else are we seeing some momentum? Cyclical, defensive, energy, and that's about it. Healthcare is not looking so good. Financials not looking so good. Yeah, we're trying to get this all figured out and sorted. But the model is showing increased bullishness, especially for the Qs. Let's take a look at the IWM. Looking bullish here. Maybe a slight bump. What's Vlad read? What did he talk about this morning? Was anyone there? Is he seeing any signs of a short-term uptick? Is he still more bearish than bullish? Not much. Yeah, trading levels are staying a little low for sure, right? That's to be expected. DIA, the Dow, still bullish. He's short-term bullish, longer-term bearish, saying have both shorts and longs. Cash at 60%. Cash is king right now. That makes a lot of sense. That makes a lot of sense. Short-term, it definitely looks like there's some momentum. Let's actually go through the long-term. Let's go back to SPY. Here's the long-term. I'm gonna do the short term, so you can still see that the model says we could have another 10% plus to the downside. We'll see, but and then let's see what the model thinks about the intraday. So the model says we're going to finish at 381 even. The number was 381.50. So Stella is a B with the rest of us Bs. We had half Bs, half Cs, no As. Okay, and Chris is a B. Got it. Okay. Okay. Sorry, I've been jumping around and I forgot what I've seen and haven't seen. Let me get back in here. Any improvement on the cyclical? The correlation is, oh, look at that. The correlation's down to a -3. So it's maybe gotten a little bit back on track. Still has quite a bit of work to go. But forecasting sideways in July through September, certainly there's possibilities there. All right. Here's the heat map. We talked about that already. Let's do a quick cyclical analysis, and then we're going to go through our watch list and just kind of see what's setting up and what we think. Ooh, no, sorry, I forgot something. Let's go into the VIX. Okay. So what are we seeing here? Actually, to me, this looks pretty good. First and foremost, we're seeing this, which is indicative of a de-escalation. Second, as you look across here, that was our highs. Then over here, we had a lower high. Right? We went up, we rolled over, come down, and then now here we go up. And this is showing itself to be another lower high. So the VIX is actually looking okay. Right? We got down to this kind of 25-ish level through here. If we can push and break through that, I'll tell you what, I think the market's starting to price in that we're going to move past the recession/inflation economy with a relatively soft landing, at least as far as the market's concerned. So I'm definitely seeing and liking a little bit more what's going on within the context of the VIX. All right, let's get into the watch list. Anything I'm missing, anything we haven't discussed that we need to discuss, let me know if you see it. Otherwise, we're just going to kind of go through the watch list. Oh, yeah, no, sorry. There was one other thing I wanted to do. Let's get a quick sector rotation going. Okay, so how's everyone trading? You trading all right despite conditions still kind of in this current environment? Let me know how that's going, how you're feeling overall. Okay, so as we look at this from the long term, we can see energy still overall is ahead of everybody else because of how vastly it moved. But you can see it's a steep decline and continuing decline as of now. We haven't seen any signs that it's really stabilizing. Then we've got utilities and staples. These are both defensive components, with healthcare slightly less so, but still defensive. Materials in that same vein. So materials is dropping a little bit like industrials are, and we'll see. Our growth sectors still lingering. Communication services, discretionary, technology, financials, industrials, they're all very similar, and we're not seeing a lot of momentum yet. This is one area of the market that I have seen that really indicates a concern overall, right? We've seen money flow out, but we're having a little bit of a harder time identifying where the money is flowing in as of right now. So at 133, very much the same perspective. Energy at the top, but coming down, followed by the three defensives, followed by the growth stocks underneath us as we go to 66 days. Again, more, but you can see now energy has dropped, and it's more defensive things, staples, healthcare, utilities. So it's hanging on from a sector standpoint. It's hanging on to this as of right now. We're starting to see a little bit of movement in these other components, right? There's technology, communication services, and discretionary, but not enough to make a difference. As we go to 22 days, we may find the first signs. And even here, not really, right? Even here, we still have healthcare showing strong, staples showing strong. We do have money flowing out of energy and materials, but it's like, are there any growth segments? Are there any growth segments that are giving any indication that things are improving? And it just hasn't yet. Okay. All right. Let's get to the watch list. It's so quiet. I get nervous. I want you guys to stay engaged, right? Stay engaged in the market. Alcoa, it's maybe trying to find a bottom. Overall, still in its downward consolidation. I need to see it break up and then test. But you can see earnings. When? $7.20. $7.20. That is 1 week from today. Alcoa reports earnings. It's right on top of us, you guys. Apple looks pretty good. I traded Apple, made some money, closed the rest of it. I'm thinking about it. Well, I'm going to see if this stochastics comes a little lower, if we're done with this dip or not, but looks pretty good as of right now. So it's definitely on my list. ADI. So with ADI, we're talking about chips, and chips would be very useful to have chips become a part of this and really participate. Archer Daniels starting to stabilize as well. I mean, Staples is moving, but Archer Daniels hasn't shown much. I'd like to see it break out before I was interested in it. But we'll keep an eye. It's definitely a leader in that group, in that space. AMD looks okay right here, right? It looks like it. This last selling cycle was pretty weak. Amazon looks close, right? Overall, I mean, it might doji up here and then all of a sudden turn, and then this thing comes down and then turns. That Amazon is on my short list. I know it doesn't seem like it has a lot of momentum, but in my opinion, if we can move, we're moving back to that kind of range. So there could be a very nice opportunity for us coming out of that. AXP just kind of grinding along the bottoms. However, these consolidations are a lot easier to break out of. So if it can pop up, I'll trade the retests, and it may have to come after earnings. We know that financials tend to be around the beginning of the earnings season. 722 for AXP. It's coming. The earnings are coming. Be very, very aware. Alibaba down. Okay. Bros, Dutch Brothers. It's kind of turned sideways, right? It's kind of turned sideways on us here. So I would say we want to be, still a bit patient. Overall. So let's make sure that we have a signal. Caterpillar. Actually, this is interesting to me because we were on a pretty steep downward move, and then we popped up. It's a maybe, right? I would definitely call that a maybe as of right now. John Deere, John said. Let's take a look as an alternative. Oh, it's on my list. We'll get there. Sorry, I'm gonna hold off. We'll get there. Okay. Let's go to COP. Oil stocks continuing to come down, right? Costco. Ooh, look at Costco. I mean, Costco looks okay. Yeah. Put Costco on the list. That looks like the sellers are running out of steam quickly. DBC, nothing there yet. John Deere, I agree. I would say John Deere is in that same kind of a vein, right? Yeah. So that's not bad. Okay. Let's take a look at DIA. So you can see that there's a lot of this going on right now. A lot of these coils, these consolidations. So yeah, there's we've got to let this develop and see what happens. Okay. FCX, new lows. I'm not there. I have no interest in that with new lows. FXI, Chinese stocks. We're starting to show some signs of life and are now like, ooh, I don't know. So be careful with anything Chinese. Gold, new lows, nothing there for us. IWM maybe starting to show something. Here is Jets maybe trying to find a bottom, but we don't know yet. Okay. Home builders reverse trend. All right, we'll take a look at those. The artist formerly known as Facebook. I like it, actually. You might think, oh, you're crazy, but I like it. I feel like I see like this, the sellers aren't doing much. Yeah, Baba was same thing. It's like okay, but I don't like that little gap and sell off to new lows, right? So I'm a little concerned with that. Meta, yeah, I actually have this on my list. If this can turn and not get all the way back down here to this area, 154 to 157, well, why not? I think there's possibility there. Marvell, there's more chip strength showing up. Okay. Microsoft had a weird issue. Did anyone see what that was yesterday? Did anyone happen to catch what happened with that? It certainly, showed a bit of a concern with that high volume sell-off. Layoffs for restructuring. Got it. Okay. We're starting to see a little bit more of that. We'll see what kind of an impact it has on our labor market overall. Neo, somebody mentioned Neo. Neo may be setting up here, right? Maybe setting up here. We'll see. Okay. NVIDIA, more chips. It's trying, right? It's very interesting. The stochastic seems to be a little behind, so it's not that helpful. But overall, it's showing some sign, and we'll see what happens with it. QQQ. It's trying to get positive, but we're still definitely in the selling cycle. Starbucks, I like Costco better, and they're very similar charts. Silver is at new lows. There's nothing there. There's more indications of strength out of the chip sector, right? What else do we have here? SPY. Ooh, we got a little bit of a sell-off here at the end of the day. You can see that we were looking between 380 and 381.50, and all of a sudden it just kind of popped down. We'll see if it recovers. John says, call it. Oh, we've got plenty of time. Plenty of time. Okay. Yeah. All right. VIX is I mean, it is weird right now, right? There's a lot of things where we're like, what is going on with all of this? and we just want to be, we want to make sure that we are taking it into consideration, right? Overall, all of it. So it was a full moon. Time to ask the 8-ball. Let's go look at Tesla. Tesla is trying to hold on to its little reversal, right? Natural gas. I am going to ask the Magic 8-ball. What do we want to ask the Magic 8-ball? Are we going to hold support and bounce higher from here? Shake, shake, shake. Magic 8-ball says, don't count on it. Whoa, that's ominous. That's ominous, 8-ball. United Healthcare coming down. Could be, right? Visa trying to hold on. The VIX, ooh, that's tough. I mean, it is over. It's engulfing this body. Somewhat of a concern, though. XLP, XLU. That XLU is actually, if this turns up, I think utilities. So we have a couple of things, right? Amazon, Facebook, Costco. These are some good-sized things. We have those available, right? But not a lot. If you were looking at those, you would definitely want to balance it with what we're seeing, like on something like this. Yeah. So we have to, we definitely have to be mindful. That's the watch list, and we have some time. I mean, we know there's no low-hanging fruit in this market, right? We know that there is concern in this market. So, be very careful. What stocks am I missing? Definitely let me know if there's something you think that I don't have that I need to have on the list. When we looked at the institutions, what did we see? We saw staples and utilities were holding up and showing the most amount of momentum. So if the market continues to be defensive, what do we want to be thinking about? We want to be thinking about utilities and staples, which would be things like Costco, XLU, XLP. Those are good enough. Well, we still have healthcare. It's certainly, it's certainly showing that there's nothing easy going on in this market, right? Did you guys place any trades? But I'm very curious if Vlad's trading levels are higher than mine. Did you guys place any new trades this morning? It doesn't seem like it. Yeah, I think we're all in the same place. We're trying not to get fatigued as we watch. We're trying not to develop any fatigue overall in what we're seeing. It's easy to lose patience, to lose focus, to lose discipline, and we really want to try not to, as far as that goes. So, are you managing your risk? Are you finding opportunities in specific segments of the market? Let me know what you're seeing there. But overall, I'll tell you what, we're just we're stuck in a situation where the market's looking for more. I don't know that we're going to get out of this until after the Fed, right? Like convincingly. We may see this grind mostly sideways until the Fed announces. So you definitely have to be very, very aware of that. Give me your thoughts. So what are the opportunities? If XLU turns up, I'd be interested. Okay, and that might happen between now and Friday. XLP, I don't like it as much, but still thinking about it. But I like, if I'm going to do staples, I'm going to look at something like Costco. So I do like Costco. I do like Facebook, Meta platforms. I do like Amazon, and I a little bit like Apple. The chips are showing a little bit of progress. That's my story right there, right? That's my story, and I am definitely sticking to it. Let me know if you have any comments, questions, concerns as far as that goes. Yeah, look, this market is a very, very interesting market. Right, we're at the mercy of the market. I know that it's easy to want to look for look for some trades, but we cannot force those trades. We have to let those trades come to us. And it's important that we maintain our discipline in doing so. So I buy cereal. There you go. General Mills, Staples, right? Staples, GIS. I mean, it may need to come back. You can see that, it has consolidated down. It looks like it's trying to turn from here. Yeah, but they just reported earnings. Earnings were good. Everyone's eating more cereal, clearly. So, that's where we find ourselves. Yeah, most definitely. Okay. Yeah, the staples are leading. I 100% agree. As are utilities, which is concerning. We had this little bit of a V, and now we're seeing a little bit more. So, that's where we're at. That is definitely where they're at. Okay. Well, Costco is not a staple in your. Yeah, I mean, it's retail, but it's close. I mean, a lot of places do put it in that realm. Does Thinkorswim? Let me see. Analyze fundamentals. Costco consumer staples. They have it in there. Me and Thinkorswim agree. All right. Well, it looks like I'm going to call it early today. And we're going to process and see what happens going forward. Thank you, Mamudu. I appreciate that. Okay, did we gain back enough? We did not. C's, you're winning today. Congratulations on your shiny gold medal. Enjoy it. We will be meeting together, not tomorrow, but we will meet on Friday in the morning. Friday for morning coffee. That's what I'm looking forward to. Be careful. Don't force trades. Let the trades come to you. And other than that, be very, very careful out there. Soccer updates. My daughter and I are leaving Sunday very early in the morning to go to Orlando for a national championship. Should be very exciting. 16 teams vying for a national title. And the Utah Avalanche are strong contenders. So let's see what happens. All right. It's good to see everybody. Like I said, be careful. Protect yourself at all times. And as always, happy trading.